So we're thinking 75 basis points. How do you think this is going to impact mortgage rates, housing sales here?
Yeah, this is very challenging situation, and we see the market turning more bearish than a couple of months ago, when we see the mortgage rate already increased by 1%, right? And then it going up further, you could see another 1% increase or so, right? So by end of the year, we could see the mortgage rate going to 3.5%, maybe. That could be a very negative impact on the mortgage payment. And we see the new home demand coming down quite a lot, especially for like recent project in Kai Tak, for example. We didn't see much demand for developers, so it makes the situation very challenging.
Patrick, I mean, what happens looking ahead to the end of this year? I mean, there doesn't seem to be very much upside. I mean, there's likely to be further downside, isn't there?
Yeah, exactly. If you look at the home prices, it's already coming down by 10% from the peak level last year. And then for the third quarter, we see 5% decline already. And for fourth quarter, we could see another 5% decline if the mortgage rate keep going up further. So very negative situation for those holding the properties right now. And challenging will be like on the interest rate if going further. And it actually affect the investment demand. When the rental yield in Hong Kong is so low, only 2 to 2.5% right now, and the mortgage rate is so high, right, going up further. And we never see that happen, mortgage rate higher than the rental yield for more than 2 decades. And last time we see that is like 97 to 2000, 2003. So you remember what happened at that time is prices coming down really crazy.
Yeah.
Right? So Patrick, I mean, I don't think Bloomberg Economics is really seeing a big upside to this, but you know, would relaxing COVID curbs drive property demand and indeed engender a rental recovery too? Yeah,
that's a very interesting point, because the hotel quarantine or further relaxation, I think this is also a positive thing overall, but actually it's also pretty challenging when we see the other markets already reopened, like Singapore, for example. We see a very good positive impact on Singapore if you look at the home prices and look at the leasing demand. The rents there are actually going up by over 10% in first half in Singapore. So Hong Kong, not sure, because I think it's already a little bit behind, right, the curve, so a little bit challenging. And for us, we actually want to see stronger population inflow coming back and then to drive the leasing demand in Hong Kong, but it's not easy, I would say.
And in terms of the policy side of things, I'm just wondering, I'm going to switch to China now. I mean, do you think that this is more just kind of a slowdown, or are we actually looking at a crash? I mean, so what do we have to look for next in the housing market in China?
Yeah, I think for China market, it also coming to the point that there could be more and more measures to support the market from the government. And it means that for overall situation, the developers, they also see the relatively weak sales over the past couple of months. Hopefully, we could see some recovery, but it also depends, because some like stay-on developers, I think the demand could be stronger because the consumer, the confidence is also stronger for those stay-on developers, whereas some private-owned developers is pretty challenging because people concerned about whether they can really get the you see the mortgage curves or whatever. It's a little bit challenging for lots of the home buyers about whether those developers could be really get the construction resume, whatever. So that's the things for China.